Macro Insights PropTech Weekly. My name is Alejandro, and I've been trading the markets since 2006 and also been the chief market strategist with many different brokers. I will share my outlook on the market and give you guys an update on what's happening, and hopefully you can use this when you're trading on your own to make better informed decisions. So let's begin then. What's been happening? Well, it's been quite an active last couple of days, I would say. Now, last week were actually a bit boring. There was not too much happening in the beginning, but then as Friday arrived, we had the US Flash Services PMI, and the market was hoping that we were going to see an outcome of 53. Instead, we had an outcome of 49.7. Now that's a big drop, and that is not great at all because the service sector in the US is the biggest sector. It is what drives the economy. We also look, of course, at manufacturing PMI because it turns earlier and is more agile, more connected to the business cycle. But this is really what's important because I think about 70% of what is produced in the US comes from the service sector. Now, let me show you this. This is the composite. Now, the composite is the combination of the manufacturing and service sector. That is this line you see here. And you can see it went from high levels to a sharp drop. And the gray bars, that's the GDP growth in the US, okay? So what this is telling us is that we're seeing a significant drop. So realistically, if this lasts, we're going to see GDP coming off quite strongly. So you might ask yourself, why is this happening? Well, it's happening. People are saying that it's happening because of the negotiation tactics of Trump. So while there was no trade war, like a proper full-out trade war between Mexico and the US and the US and Canada, if you go on social media, the Canadians are not happy with the Americans, and they have already decided not to buy, say, US goods. And also in Europe, in particular against Tesla, we have seen purchases of Tesla cars drop massively. I think in some countries between 40 to 60%, and people are mocking him, in particular because helping, of course, the far right in Germany. So even though, again, there wasn't an actual trade war, the damage is there. And Trump as well, like he's not making Europe too happy, excluding Europe from peace negotiations with Russia and Ukraine there. So that is influencing things. Now, maybe, I'm not sure, but maybe from a short-term perspective, maybe this is a one-off. We will need to see. But this explains why stock indices dropped massively. It also explains why crypto crashed. And this is just one bit. We also had this. This is the Michigan consumer sentiment. And the consumer sentiment, what's interesting here is that it was on a nice little uptrend, dropped a little bit in January, and then in February, again, a massive drop. Again, Trump, the way he negotiates, Trump, the way he works. Let's not forget DOGE, the Department of Government Efficiency. They are, firing federal workers to trying to improve things, and we have seen this before. Because if you look at what happened in Argentina, for example, when they started to cut down on public sector, poverty levels increased massively. Inflation even increased massively. There was a lot of drama when the Argentinian president implemented huge changes. Not saying the same thing is going to happen here, but when you're starting to shake the economy, people get scared. They don't want to invest, they don't want to buy, and that's what the data is showing us. So we'll see how it plays out. I personally suspect, like if you look at jobless claims, for example, there's a weekly indicator that is holding up relatively well, and I suspect that maybe it's a one-off. And if it is a one-off, then obviously it's going to be good for stocks, might even be good for crypto, although that is a separate topic altogether. So what else then? Macron suggests that Ukraine truce could be weeks away. We talked about this before, how in Russia, oil production is roughly at 9 million barrels per day. Before the war, it was at 11 million barrels, yes? Now, if there is a truce coming, if there is a deal which everybody can accept, then Europeans are going to be quite keen on buying Russian oil. But it depends on what kind of deal Russia and Ukraine agree to, okay? That's a huge question mark right now. It could still be some resentment, because we need to remember, we don't just do business with people because it makes economic sense for us. A lot of people just buy because they like the other person, and that's it. Especially when the product can be easily replaced from one place to another. Like oil from one country, when refined, like gasoline, for example. At the end of the day, you can take US gasoline, put it into your car, or you can take Russian gasoline and put it in your car, right? There are things you can substitute. So we'll see how it plays out. But this obviously explains quite a few things. It explains why oil is down massively. Because if you go from 9 million barrels per day to 11 where they used to be, then that's a huge output. Look at it like this. OPEC Plus, Russia belongs to OPEC Plus, but OPEC Plus on their own, they want to increase production by 2.5 million barrels per day, all right? So I'm not saying it will happen, but imagine if OPEC Plus agrees to 2.5 million barrels, and then Russia says, you know what, guys, we are also gonna just push up our production because, you know, we've been in war, we need to rebuild. So then I'm not saying we're gonna get 2.5 million barrels on the market, but you can get the idea that what kind of impact that would happen. And remember, Trump as well wants to drill. So that as well is influencing oil. Now, not everything is great. So Israel's foreign minister, he's warning about a military option that could be required to stop Iran from building nuclear weapons. Now, we know from, Iraq, they didn't find any nuclear weapons there. The Iranians are saying that they don't have any nuclear weapons. I don't know exactly what's going on. But obviously, a lot of these different countries, you have Syria, you got Iraq, you have Iran, you have Libya, Somalia. It's been quite a lot of activity there. Let's hope this is just a one-off. But things are a bit changing now. I think realistically with Biden, not much would have happened here. But if you remember when Trump was president last time, then they did impose sanctions. And if I remember on top of my head as well, there was, I think Iran took over a shipping container, I think it was, like an oil tanker. I don't remember exactly now, but obviously things can change dramatically. But yeah, this is there as well. It's like low key, but it's something to keep an eye on. We're gonna look at the charts in a minute. Let's just take a look at what can happen today and the next couple of days. All right, you have Nvidia. Nvidia are out earnings today, and that could have a big impact on the NASDAQ 100. So if you're trading the NASDAQ 100, bear in mind that Nvidia could have quite a massive move. This is interesting. Over the last 20 reports, that's over the last 5 years, roughly half of the time, the Nvidia stock turns higher the next day, and about half of the time it turns lower, despite Nvidia actually outperforming and usually beating expectations. Now, the problem right now is that people are very optimistic on Nvidia, and they have been that for a long time. Why is it like that? Because they have almost a monopoly status in terms of what they do. And obviously we had the DeepSeek model produced by a Chinese company, which is a competitor to OpenAI, and they're using the old Nvidia cards. So obviously if people can use the old Nvidia cards, then you don't necessarily have to buy the last version of the chips. But the way things look right now, I personally think that Nvidia will continue to do good, but you need to bear in mind that after market close, the data's out, so you might see your NASDAQ 100 position move up or down. It can have quite a big impact. What's also interesting is this: if tomorrow is bullish, then you tend to see the stock continuing to gain. So after 30 days after the earnings report, if the stock is up tomorrow, you have almost like 100% probability the price will head to the upside. And the difference between first day profits or first day gains versus 30-day gains is about 14% on average. Also, if tomorrow is a negative day, and we tend to drop with I think about 4.5%, 5% on a negative day, if that happens, then normally, look what happens 30 days after. Well, you will almost have 100% probability that the stock is going to be lower. But this is interesting. After, if we ignore the first day movement, if you ignore that, then typically 30 days after earnings, the stock of Nvidia is going to be up with 22%. 30 days after earnings. Well, if it's down, it's going to be down with 8%. Now, the probability of the market being up is just 40%, and the probability of being down is 60%. But you are traders, so you know that that is still a very good risk to reward ratio, right? Because even though they're up only 0.5% of the time, if you make 22% when you win and you only lose 8% when you lose, then you still make money, right? So I'm finding this super interesting, and again, it can weigh a bit on the market. It can weigh a bit on indices. Whereas if we see a very positive close, that will be for tomorrow, and that could be an indication that it's going to turn bullish again. Tomorrow as well, you have GDP numbers. They are anticipated to remain unchanged at 2.3%. That's obviously interesting. And we have durable goods orders. And if you're trading the Japanese yen, you have Tokyo Core PMI, sorry, CPI, Consumer Price Index. That's obviously key for the market if you're trading the Japanese yen. It is very likely, given how wages are moving, that we will see further rate hikes by the Bank of Japan, and people are quite keen on buying the Japanese yen. So with that in mind, you definitely want to keep an eye on that. What else? Friday ends the week with Core Producer Price Index, where people anticipate the producer price index to jump from 0.2% month-over-month to 0.3%. This is interesting because we know the Fed is afraid of doing anything about inflation right now. I think Jerome Powell is afraid of losing his job, and he wants to take it very careful. But obviously now, with the weak data coming in, you know, maybe it was the right move for him. We're gonna see on Monday what the ISM manufacturing index says. This is a different PMI than the ones we saw last Friday. So it will be interesting to see if we get a confirmation that the economy is weak or not. So how about the markets? What level am I watching? So this is Euro USD, and we're still below this level, which is 105.33. The market is sort of being stopped here. I don't have a very strong view, but we can see, if you look at this, you see the price is pushing higher and higher. It's being rejected. It's being like a wall almost. It's not very difficult to see that there's probably some good amount of stop loss orders on the other side here. I would say if, for example, Nvidia results are good and tomorrow we have weak US GDP numbers and weak durable goods orders, then this could probably break to the upside. At that point, I think 106.30 would be the next level. On the other hand, if Nvidia is really weak, so you got a sell-off, stock markets go down, and as well if US GDP is really strong tomorrow, and in particular if US inflation on Friday is very strong, then realistically going to remain below this level, maybe go down to 103.97. Here is Brent. Last week we said look to sell here with stops above this level. This played out perfectly. The market collapsed towards our target, and then we continue to move to the downside. Now, if you just look at this, you are traders, so you know what we're talking about. We're just at support. We have as well all this news about the truce being played in, priced in. So maybe the downside is a bit limited. But we cannot ignore the fact that you have 1, 2, 3, 4 lows at the same level. So that's a very strong resistance level around $74 a barrel. So I would say if we would trade towards sort of 73-ish, I think people want to short sell. We'll stop loss orders above 74, 79, and then target the downside again. That's what I think. How about the NASDAQ 100? Well, last week we were trading here, and I was myself long on the breakout. But then we had that very weak data. I got stopped out in the process. The market collapsed, and we're now at the lower levels. Now, again, the data, we're not going to get any strong data. Like, we just had the Flash PMIs out, right? So the next set of data that we want to watch would probably be next week's non-farm payrolls report and the jobless claims on Thursday. The jobless claims figures can give us an indication if something is happening in the economy. And for now, like, it's very easy to panic. You know, you look at 1 month's of data, then you'd be like, oh, this is bad, the economy is gonna tank. But most of the time, things sort themselves out. So I suspect that as long as you trade above 20K to 2,500, I think people are gonna be very keen on buying down here for this to go to the upside, because most of the time it's just a sell-off, that's it. And realistically, not much is going to happen. We're going to be bullish. Bear in mind that when you have a Republican president and the Republicans also control the House and the Senate, you'll get about a 13% annual return on the year. We cannot really see where the market price is here, but it doesn't look at all like we're far away from a 13% upside. How about gold prices? Gold prices were really boring last week, so we're just pretty much trading sideways and then sold off. And we're still above, this is the level we talked about last week, that was the trend defining level. And I have now reduced the trend defining level, and I'm bullish above 2,877. As long as we're above this level, we could push to the upside. Now, the bit of a problem here is that technically, again, I'm bullish. I've been bullish since last year when we were trading much lower. But from a technical point of view, it really struggles to trade to the upside here, okay? And as you know, as traders, we sometimes just go up, then you have a bigger sell-off, stabilize, and then go up. Maybe that's what's happening here right now. It's difficult for me to say. But what I can tell you is that as long as you trade about 2,877, the trend is bullish, and I want to keep on seeing this to the upside. All right, here's Bitcoin. So it finally happened. The price was stuck there for about 95 days, 95 trading sideways. And then you have a very nice breakout. So this, you get yourself like a double top, and then you had several support levels here. That was a good opportunity to short sell for a move to the downside, okay? And yesterday's close was actually remained weak. And last time I checked, we're sort of around the levels. So we haven't had a material upside, but realistically, if we go up to 91, people are probably gonna short sell on the back of what's happening with the US economy. And realistically, I mean, at least according to this pattern, we can go down to sort of $74 a barrel, a coin. And you have all these resistance levels here, which would be, from a technical point of view, a really good opportunity to trade. Now, the thing here is that people are very much aware of this now, and they're probably all waiting to buy at 73. And we also know that altcoins, people have been completely destroyed. It's not a good situation right now. So I personally think around 80 would be good. Like, these are technical patterns. Often you get like 70% of the move or half, and many times you're not even getting that. So I think it's very unrealistic that we're going to go all the way down to $74. And remember, Trump has promised big changes. Eric Trump, Trump's son, said a couple of weeks ago that now was a good time to buy Ethereum. And there was a photo of the heads of Ripple. I think it was with Trump. So they had a photo published last week as well. So things are brewing in the background. And I think we just need to flush this out. There needs to be a bit of a flushing out of the system, I guess. So maybe down to 80. From 80, if one is a long-term believer, I think that's where you can actually be buying. If you want to buy on strength, which is a very good idea, then you just wait for the price to stabilize there and see what's going on, because I think this can trade a little bit lower. The alternative, if I'm wrong, is that we actually somehow manage to push above sort of $92, 92K, I mean. If we do this, then this whole move would be a negated, okay, fake out. And when that happens, you can maybe get that squeeze. But the market is really tired. We crashed yesterday. You had some coins that were down 10% that at the end of the day finished the day up +3, and now we're up maybe 6. Litecoin is one of them. Well, I don't think it declined that much, but it was up, I think 7% today. But everything else is sort of, people are not really that keen. And it makes a lot of sense because particularly if you look at altcoins, people, it's just being crushed. With that in mind, let's see if you have any questions. Otherwise, we're gonna wrap things up. Let me see here, I'm gonna look here on my computer if you have any questions. So I'm just looking at your comments. What about GBP? Yeah, we can load it. Let's load the chart. Yeah, so this is GBP, which we discussed last week, I think, with you. Well, not you specific necessarily, but here on the feed. My view at that point was up, but I wanted to see a slight downside. But what's happening here is that the market just decided to push the upside. You're having a bit of a short squeeze. And what's quite interesting in the terms of the British pound is that you are in a situation where the unemployment rate was unchanged, roughly, I think it was 4.1%, and total wage growth increased by 6%. That's a huge one. And inflation came in at 3% from 2.5%. So inflation is on the way to the upside, okay, from 2.5% to 3%, yes? And then you have wage growth coming in at 6%. So the unemployment rate went up from, I think, yeah, maybe like 3.5 or something like this to 4 point something since 2022. So the labor market is ultra strong right now in the UK. And with that in mind, the Bank of England is less likely to cut rates. And that's why you're seeing this particularly strong. But I think if you wanted to trade this in a more creative way, you probably need to do something like maybe GBP AUD. Let's take a look at that. So here you see the Aussie dollar getting hammered. Why? Because in Australia, while the economy is not too bad, they did cut rates, and they're keeping the door open to cut rates further because inflation in Australia was, I think, 2.2 in the last quarter. And the unemployment rate again is quite strong. But the RBA think that there's going to be a possibility to cut rates more. So here, I would, for something like this, I would just sort of identify the low. So you have the low here from well, yeah, no, actually, this is the overnight low. And then you would use your system. Like, there's different ways of dealing with the market, but I would look for a pullback and then be bullish. And then you have as well GBP and CD, where the New Zealand central bank is even more dovish than the Aussie central bank. And here as well you have what looks to me like some sort of a wedge pattern. And if you draw, I think this, because the fundamentals are the way they are, let's just draw from the base. And then here, it's just a 357 pip move. And then here, much like with the Aussie dollar, you would look to realistically buy on a pullback. And in terms of this one, because we actually have a pattern here, it would be perfectly fine to be bullish about 2.21. And the first target would probably be around here, around 2.23. Of course, I know a lot of you are trading with under the Think Capital Pro program, which means that you probably are trading this move in several smaller bite-sized chunks to avoid the reaching your daily stop out levels and so on. But yeah, this is what I'm watching here. You're welcome, Vicky. Okay, let's see here. I'm gonna jump on X, see if we have anything on X. So X is a bit special. It doesn't actually show me. Here we go, up here. All right. Okay, so on X we have 16 viewers, but not a question. That's all right. We're gonna wrap things up. I will be with you next week for the next market update. Happy trading. I hope you're all successful. I hope you get your funded status. And if you're already funded, I hope you have an amazing week. And I'll see you soon. Goodbye.